After a gap up, there is naturally some divergence between price and the Coppock curve to indicate the trend could be slowing soon, but not necessarily leading to an immediate reversal. Since the uptrend has begun to stall, the Coppock curve has fluctuated below and above zero, with the line currently plateauing slightly over zero. So just like the previous example, this is a situation where indications from the Coppock curve aren't so clear or useful. A simple thing we can do to help is to mark the gap up range. If there is to be a successful bullish continuation, it would be preferable to see the Coppock curve along with price and volume continuing to rise on a more moderate to steep angle, while quickly and decisively closing over 1650, or even better to clear right over 17, all while the Coppock curve is in positive territory. But since this criteria is not met within a timely manner, it's natural to see price reversing back down and buying volume decreasing, along with values of the Coppock curve going back under zero. Technically, the Coppock curve is confirming a downtrend with the cross below zero, but for an extra layer, we can add closing under 14 at the gap up level for stricter criteria. Since the gap is relatively narrow, we can take this a step further and define a lower boundary for this now probable double top range, where it's quite natural to see a bullish retracement after contacting the gap fill around 1280. Yes, price is crossing back over 14 and there's a cross back over 0 for the indicator. But just like with the previous potential breakout over 1650, we need to watch short-term developments carefully. Here it's turning out to be a similar scenario with a brief close over 14 and the short duration of the Coppock curve back over 0, quickly giving way to a return back towards bearish context. Except in this case, it's towards a potential downward continuation, where a bearish perspective would now want to see the strong close under 1280, followed up with price continuing to close consecutively lower, along with a steeper decline of the Coppock curve remaining under zero. Now, with this gap down getting filled, it's essentially the opposite situation, where a cross of the Coppock curve back into positive territory could be considered an early sign of bullish momentum building. However, it's still not enough until price also clears over 12, which marks the gap fill level. This is indeed gradually taking place while Coppock curve values also begin to incline to higher values, resulting in a good demonstration of how basic structures and patterns on the chart can be combined with the Coppock curve for better trend confirmation and more decisive identification of breakouts.